Hi everyone, we are your reporters for today. I'm Jenny Soriano and this is my group mates. Raven Sarmondalo, Espiritu, Jasmine Stebes, Justin May Flores, J. Mark L., and Christopher Peher. Our topic is Chapter 4 from the Book of Legal Aspect in Tourism and Hospitality. In this report, we will explain the key points and give example to help you better understand the lessons. We hope you enjoy and learn something new from our presentations.
Hello, I'm Raven, and our topic is Law on Sales. Law on Sales, which is a significant component of civil law. This area of law is particularly relevant to the hospitality and tourism industry, as entering into contract of sale is one of the many activities that management regularly undertakes. A sale is fundamentally a contract, and as a general rule, it is perfected by mere consent between the parties involved. This means that the contract of sale is formed as soon as the seller and buyer agree on terms, even if the item has not yet been delivered or paid for. The two primary parties in this type of contract are referred to as the vendor, who is the seller, and the vendee, who is the buyer. Both parties have specific reciprocal obligations to each other. The vendor is obliged to deliver the item and transfer its ownership to the vendee, while the vendee is responsible for paying the agreed price for the item. There shall be legal consequences if this obligation is breached by either party. This chapter of discussion aims to delve deeper into the different rights, obligations, and the potential consequences that arise when entering into a contract of sale, providing a comprehensive understanding of what each party is entitled to, what they must do, and the repercussions if these duties are not fulfilled. Contract of sale is specifically as outlined in Article 1458. This article states that in a contract of sale, one party, the seller, commits to transferring ownership and delivering a specific item. In exchange, the other party, the buyer, commits to paying a definite price, which can be in cash or its equivalent. This definition emphasizes the mutual obligation and necessity of a clear subject matter and price. Furthermore, the slide highlights that a contract of a sale can take one of two forms. It can be either absolute or conditional. An absolute contract of sale is straightforward with no conditions attached, meaning ownership typically transfer upon delivery. Conversely, a conditional contract of sale is one where the transfer of ownership or the full effectiveness of the contract depends on a specific future event or condition being met. This distinction, such as crucial for understanding the rights and obligations of both parties in different sales scenarios. For more detailed definition, a contract of sale can be classified into two main types: an absolute contract of sale and a conditional contract of sale. An absolute contract of sale is not subject to any conditions or stipulations, and ownership of the property or item is transferred immediately upon delivery, provided payment is made or agreed upon. It is considered a perfected contract upon mutual consent regarding the object and the price. In contrast, a conditional contract of sales perfection or fulfillment is dependent on the happening of a future and uncertain event, known as the condition. Ownership is not transferred immediately upon delivery. Instead, it is reversed by the seller until the specified condition is met, such as full payment or approval by a third party. If the condition is not met, the contract may be rescinded or the obligations may not arise.
Sale by its very nature is a consensual contract because it perfect blank consent. The essential elements of the contract of the sale are the following: a consent of meetings of minds, that is consent to transfer ownership in the exchange for the price. Consent or meeting of the minds, both the buyer and the seller agrees to sale. There is a mutual understanding of what is being sold and bought. For example, Maria agrees to buy an refrigerator for 10,000. Both agree on the terms, meaning there's a consent. B. Determinate subject matter. The item being sold must be clearly identified and existent or at least determinable. For example, the refrigerator being sold is a Samsung 10 feet model RT10. It's a specific known item. C. Price certain in money or its equivalent consideration. The term equivalent may refer to check or other negotiable instruments. The price must be agreed upon and in money or negotiable equivalent. For example, Maria pays Anna 10,000 in cash or write her a check for that amount. That's a valid consideration. The contract of the sale is perfect at the moment there is a meeting of the minds upon the thing is the subject of the contract and upon the price. From that moment, the parties may reciprocally demand performance subject to provision of the law governing the form of the contract. This contract of sales may be in the writing or by words of mouth orally. In the following transaction, however, the contract must be in writing. Otherwise, the contract is unenforceable unless when there already partial or complete execution. Number one, the sale of the real property. For example, selling a lot or a house. If John sells his lot to Pedro for 1 million, this must be in writing, otherwise it can be enforced in court. Number two, sale of movable property or personal property. If the price of is 500 pesos or more, for example, you sell your motorcycle for 25,000, this should be in writing for legal enforceability unless the buyer already paid or received the item. Number three, sale which must be performed and executed only after more than a year from the time of the agreement. For example, a contract says a car will be delivered and paid for 18 months from now. This must be in writing since the execution is beyond 1 year.
Hi everyone, my name is G. Martin, base HM71, and my topic is sales of immovable property through an agent. Special power of attorney is needed. When the sales of a piece of land or any interest, there is through an agent. The authority of the latter shall be in writing, otherwise the sales shall be void. Ayon po dito is bago ka po makapagbenta ng lupa is kailangan po ng isang special power of attorney na nakasulat na binibenta mo talaga ito. Example po is Mr. X is a Filipino citizen and is working in a big company in the United States of America. He owns a 300 square meter parcel of land located in Quezon City, Philippines. Considering that he was already decided to stay in America for a good, he now intends to sell that parcel of land. Through his cellular phone, he called up his cousin Isabelo to look for a buyer. Isabelo was able to look for a one, and that is Mr. Matt, a professor of tourism management and owner of the various restaurants in Manila. Isabelo then called up Mr. X, informing him that he was already in a buyer. Mr. X simply replied, "Alright, execute all necessary documents on my behalf." Mr. Matt and Isabelo entered into a contract of sale. Is the contract of sale is valid? No, because the authority of Mr. Isabelo, who is the agent of Mr. X to sell the property, was not in the writing, and the order for the agent to validly sell the immovable property of the principal or the owner, the agent must be authorized to do so in writing, otherwise the sale is void. Contract of sale of parcel of land must be in the writing but not necessarily notarized. True, a conveyance of the land is not made in the public document, meaning not notarized. It does not affect the validity of the such conveyance. Two kinds of sale. Number one, absolute sale. A contract of sale is absolute when the title, the property, passes to the vendee upon delivery of the thing sold. A deed of sale is absolute when there is no stipulation in the contract. The title to the property remains with the seller until the full payment of the purchase price. The sale is also absolute if there is no stipulation giving the vendor the right to cancel the unilaterally the contract the moment the vending fails to pay within a fixed period. po dito, ang absolute sale ay isang uri ng pagbebenta kung saan agad napupunta ang pagmamayari ng ari-arian sa bumili. Example, Justin Corporation through its president entered into a contract with Joy, the registered owner of a 500 square meter lot located in the Baguio City. In the said contract, Joy conveys a transfer and sale his said land to the Justin Corporation for the amount of 5 million pesos. Justin Corporation shall be paid the contract price into two installment 2.5 million pesos upon the signing of the contract and the other on December 15, 2016. The above example is absolute sale because the contract expressly transferred ownership to the Justin Corporation despite the fact that the latter shall pay the contract price into two equal installment. In the absolute sale, the transfer of the ownership is not subject to any condition. Number 2. Conditional sale. Ownership remains with the vendors and does not pass to the vendee until the full payment of the purchase price. The full payment of the purchase price partakes of a suspensive condition and non-fulfillment of the condition prevents the obligation to sell from the arising. An example is the contract to sale. Dito naman po sa number 2, conditional sale is bago po mapasayo yung binebenta na lupa is may condition siya po. Halimbawa po is yung installment is kailangan po na full payment ka na bago mapasayo yung lupa. Example po, Justin Corporation through its president entered into a contract with Joy, the registered owner of the 500 square meter lot located in the Baguio City. In the said of contract, it was stipulated that Joy shall convey, transfer and sale said land to the Justin Corporation upon the payment of the full contract price amounting to the 5 million pesos, which shall be payable in a 2 monthly installment. 2.5 million pesos upon signing of the contract, and the other 2.5 million shall be paid on this December 15, 2016. Further, upon the payment of the said price, Justin Corporation and Joy shall execute another contract that finally transfer ownership. The above example is a conditional sale because the transfer of the ownership is dependent upon the happening of the condition, that is the full payment of the contract price, and upon execution and another contract that finally transfers ownership. If the two conditions are not met, there will be not transfer of ownership.
Hello everyone, I'm Christopher Ferrer. My topic is transfer of ownership. Article 1477. The ownership of the thing sold shall be transferred to the vendee upon the actual or constructive delivery thereof. Transfer of ownership. It emphasizes that ownership of the item sold not transferred simply by agreeing on the sale or by paying for it, but only through actual or constructive delivery to the buyer. The law imposed a duty on the seller to deliver the item, and only then the buyer considered the legal owner. Example, Mr. X buys rice from Mr. Y and pays in advance, but ownership does not transfer until the rice delivered. This highlights B that delivery is the legal act of completes the transfer of ownership, not just payment or agreement. Sale of personal property on installment. Article 1484, the Recto Law. Article 1484 of the Civil Code was intended to protect buyers who buy personal property in installment. It prevents sellers from unfairly profiting themselves by retrieving the goods when buyer defaults while keeping any
payments received. Under this law, sellers must choose between canceling the sale, requesting full payment, or retrieving the goods. Remedies under the Recto Law. This Recto Law states that in a contract of sale, personal property, the price of which is payable installment, the vendor may exercise any of the following remedies. Remedies under the Recto Law. The Recto Law provides remedies seller in the Philippines when a buyer fails to pay installment on a personal property sale. Exact fulfillment. If the buyers miss a payment, the seller can demand full payment. Cancel the sale. After 2 missed payments, the seller can cancel the sale and take back the item. Foreclose the chattel or mortgage. After 2 missed payments, the seller can foreclose the item but can't ask any more money after that. Conditions for Recto Law to apply. Absolute the contract of sale. The sale must be final and conditional. Personal property. The item sold must be movable, not estate. Installment basis. The buyer must be paying through scheduled installments.
Maseda Law. The Maseda Law, officially known as the Republic Act No. 6552, is a law in the Philippines that provides protection for buyers of real estate under installment sales. It was enacted in 1972 and its primary purposes is to safeguard the interests of buyers who are paying for a property on installment terms, especially if they face difficulties in continuing payments. Right to a refund. Buyers who have paid at least 2 years of installments have the right to a refund if they decided to cancel their contract. The amount refunded is a percentage of the payments made, less administrative costs and the interest. Right to grace period. If the buyer has missed 1 or more payments, the law given them a grace period of 60 days to settle the payment without penalty. During this period, the buyer won't lose the property or face additional charges. Right of a buyer to sell. Once a buyer has legally purchased goods or property, they typically acquire ownership rights, which include the right to resell or transfer the property. This right is subject to clear title. Buyer must have goods and legal title to the item or property. No restrictions. There must be no contractual or legal restrictions on resale, possession, and delivery. In some transactions, the buyer may not resell until full possession is taken. Obligation of a vendor. A vendor has several obligations, commonly including transfer of ownership, delivery clear, legal title to the buyer, delivery of goods or property provide the item as described and agreed. Warranty or guarantee, express warranty, promises made in the contract, implied warranty, legal projections even if explicitly state. Disclosure, reveal any defects or issues with the item, property, especially in real estate. Compliance with contract terms, meeting the price, quality, time, and other obligations agreed upon in the contract. Obligation of a vendor. A vendor has several obligations, commonly including transfer of ownership, delivery clear, legal title to the buyer, delivery of goods or property provide the item as described and agreed. Warranty or guarantee, express warranty, promises made in the contract, implied warranty, legal projections even if explicitly state. Disclosure. Reveal any defects or issues with the item, property, especially in real estate. Compliance with contract terms. Meeting the price, quality, time, and other obligations agreed upon in the contract.
I will be discussing the implied warranties in contract of sale. Implied warranties are those that are inherent in the contract of sale. This means that even if the parties did not stipulate on the matter, this warranty is always attached in the contract. Note, however, that implied warranties may be waived by agreement of the parties. So, when we talk about the warranties, these are the basically guarantee that the seller gives to the buyer regarding the quality and ownership of the goods being sold. Now, in the legal terms, we have something called implied warranties. These are warranties that are automatically included in the contract of sale, even if they are not written or not openly talked about by the parties involved. That means, even if the buyer and seller don't specifically mention these warranties, the law still consider them to be part of deal. The following are the implied warranties. Number 1. Warranty against evictions. The seller warrants that he has the right to sell the things at the time of the ownership is to pass, and that the buyer should enjoy the legal and peaceful possession of the thing. If the buyer is evicted, then the seller should be liable. Warranty against eviction is a legal protection given to the buyer, ensuring that the item being purchased is free from any ownership claims by the other parties. The seller promises that they are the rightful owner and have the legal right to sell the item. This warranty guarantees the buyer will have a full, peaceful, and uninterrupted possession of the item. If someone else later proves that they are the true owner and takes back the item, the buyer has the right to take legal actions against the seller and demand compensation of damages for the loss. This helps protect the buyer from legal troubles and ensures fairness in the transactions. For example, Anna buys a parcel of land from Carla. Later, Pedro comes with a land title proving he is the rightful owner and evicts Anna. Since Anna was the evicted due to Carla's lack of ownership, Anna can hold Carla liable under the warranty against evictions. Number 2, warranty against hidden defects. This is warranty that the thing should be free from any hidden faults or defects, or any charge or incongruence not declared or known to the buyer. Warranty against hidden defects, also known as hidden faults, is the seller guarantee that the item being sold is free from flaw or defects that are not immediately visible or obvious during inspections. These hidden defects must not have been known by the buyer at the time of purchase and must significantly affect the item use or value. The item should be in good condition and suitable for the purpose for which it was bought. If any hidden defects are discovered after the sale, the buyer has the right to seek a remedy. This may include asking for a refund, requesting a discount, or even canceling the sale altogether. This warranty protects the buyer from being misled by defects that were not disclosed at the time of the transaction. For example, Brian buys a refrigerator from a seller. After 2 days, he discovered that the freezer doesn't work due to hidden wiring defect. If the defect was unknown to Brian and was not disclosed by the seller is liable under this implied warranty. Double sale. It happens that the same thing which is the object of the contract of sale is sold to different vendees. This is called double sale. The problem would be as between the two buyers to whom will ownership of the things be given. Article 1544 of the Civil Code provides. A double sale occurs when the same property is sold to two or more different buyers. This situation often arises when a seller either fraudulently or unknowingly enters into multiple sales contracts involving the same item or piece of property. As a result, there is confusion or conflict about who is the rightful owner. The Civil Code of the Philippines provides guidelines to resolve these issues, and the rule depends on the nature of the property, whether it's movable or immovable. Rule: if the object is personal property. If what has been sold to two or more buyers is a personal property, the ownership should be transferred to the buyer who first possesses the property purchased in good faith. When it's come to personal property, items that can be physically moved like a cell phone, like laptops, jewelry, or furniture, the law provides a clear rule in case the item is sold to multiple buyers. If the same item is sold to two or more people, ownership is granted to the buyer who first take possession of the item in good faith. This means the buyer must not know that the item was already sold to someone else, and they must be the first to actually receive or take control of it. Being a good faith and taking physical possession first are both required to legally own the item. For example, John bought a cell phone on January 19, 2020. However, the same cell phone was sold again to Kevin, who received or took possession of it on January 25, 2020. Even though John was the first buyer, Kevin becomes the rightful owner because he was the first to take the actual possession of the cell phone in good faith. Rule: if the object is immovable property. If what has been sold to two or more buyers is immovable property, the ownership shall be transferred to number 1. The person acquiring is who is good faith first recorded it in the registry of property. Number 2. In default thereof to the person who is good faith was first in possession. And number 3. In default thereof to the person who presents the owner's title, provided there is good faith. The requirement of the law then in twofold: acquisitions in good faith and registration in good faith. Good faith must concur with the registration. If it will be shown that a buyer was in a bad faith, the alleged registration they had made amounted to no registration of all. For immovable property such as land, houses, condominiums, or buildings which cannot be physically moved, the law states that if the same property is sold to two or more buyers, ownership belongs to the buyer who first registers the sale in the registry of property, as long as the registration is done in good faith. This means the buyer must not be aware of any prior sale of the same property and must be the first to officially record the transaction. In short, the first to register in good faith becomes the legal owner of the immovable property.